protecting Main Street from Wall Street. It's time for Money Unleashed with Eric Johnson and Kyle Allyn.
You have to have a plan where you know if the market's going to go up, what happens next. And you also have to have a plan where if it doesn't go the way you think, you know what you're going to do.
It's time to put you back in control of your money.
I'm not trying to predict the weather, which is kind of what we're talking about, right? It's predicting the stock market. I'm trying to build a better boat.
This is Money Unleashed with Eric Johnson and Kyle Allyn.
Welcome to Money Unleashed with Eric Johnson and Kyle Allyn. We are powered by the Hoffman Financial Group, and each and every week we're bringing you new episodes. So make sure you're subscribed wherever you get your podcasts. Just search for Money Unleashed. Now let's talk about something that's been on top of everyone's mind, Kyle. It's Bitcoin. It's on a heater, and we're seeing a lot of people coming in here asking about it. What are your thoughts on Bitcoin and the mania that's going on around it right now?
You know, I've always said that I'm not anti-Bitcoin, but I don't consider it an investment. Bitcoin doesn't exactly know what it wants to be, so is it a currency or is it a security, right? There are laws that govern both. It is getting cleaner. It is getting better. Of course, at the beginning of this year, we saw an ETF created, so I would argue that over time, it's making more and more sense. I also understand why people would put money into something like that. It's a diversified asset class. If Wall Street ever picks it up, boom, it's going to become a big deal. But I'll say this, you probably should have bought it back in January when the ETF was created. You probably should have bought it back at 30 or 40. So, you know, we always see this with different things. You see these sort of fear of missing out, greed that shows up at the end. And it's like, really? You're going to buy it at the top?
Well, realistically, a year ago, Bitcoin was around $15,000 a coin, and it's approaching 100 and people want to buy it now. I would argue that you probably missed the boat. If you're looking for like a 10Xer, which those don't come around very often, I would probably be telling people not to do that. And, you know, incidentally, Bitcoin, according to the SEC, has been considered a commodity, very similar to gold. And it's a simple supply and demand on the blockchain and how many Bitcoins are actually in this world and can be achieved. So I like Bitcoin. I do. If you look at the history of money, money has been progressing throughout time, right? Like, the cavemen used to use shiny shells, and then the Egyptians used to use salt. And then all of a sudden you've got gold. Then you've got fiat currency like the US dollar, right? That used to be based on gold, but now it's based on, our country and, in God we trust. So money is going to continue to progress in different forms, and I think cryptocurrency is the next form of money. Now, what confuses people about this is actually the word currency. When you hear the word currency, you assume you have to spend it. I talk to people, I'm like, it's more of like a store of value, especially for Bitcoin. Like if you're going to buy a $10 cheeseburger with Bitcoin and then 3 months from now it's going to be worth $45, I don't think anybody on the planet would be buying that cheeseburger with Bitcoin. So I think that's something that kind of confuses people when it involves Bitcoin. But we're seeing mania all over the market right now. I mean, we've got some people that call themselves degen DAO people, right? Like, what's that? Talk to me about that.
Yeah, I saw this concept. So we've talked about Josh Brown before, and there's these articles that are starting on the Wall Street Journal. They were talking about this idea of the degenerate investor. So The degenerates are these young amateur traders that are taking these really, really erroneous sort of wild long shot bets. And it's on things like Bitcoin, leveraged ETFs, AI. It's kind of the Cathie Wood of the world. We're also seeing that there's these wild bets on different things as far as what Donald Trump may or may not do. They're using options activity. And kind of to wrap it back into the Bitcoin discussion, I'm not seeing where most clients need this game. Like, if you want to play with a small piece of your money, let's have some fun. Like, I've been to Vegas too.
Yeah, take 1 or 2% of your portfolio. If you want to throw it into Bitcoin, knock yourself out. But we're here to make sure that you win.
That's right. And some of these people, they're literally calling themselves degenerates. Some of the investment theories that you see from these people aren't even based in making money. It's just trying to prove a point.
Right. But everybody's always going to be looking for the next whiz-bang 10X type of investment.
But not me. And that's why we make money for our clients in all kinds of markets. I'm not trying to find the next Apple. I'm trying to understand when those things come along and then get clients in them appropriately. Like, I don't need to see the wave a mile out. I just need to make sure I see the wave before it breaks on the shore.
Right. And we don't believe in the all eggs in one basket approach either. You can make a lot of money quickly. You can also lose a lot of money quickly when you're executing those types of very risky investment ideas. But, we like a broad-based approach. We make a la carte plans for people. And yes, sometimes people have their own little trading accounts. We allow you to have those. We're not trying to take the baby away from you. So if you do want to, like, I remember a few years ago when marijuana stocks were the hottest thing out there, and then it was investment bonds, I-bonds. That was a hot thing for a while. And then, Bitcoin, back when Trump was president last time, that was another hot topic. And now, it's swinging back around again for the Bitcoin. But the bottom line is we're seeing mania all over the place. And on top of that, guess what? It's Christmas time. So what does that mean? It means we could have a Santa Claus rally. And so for everybody out there who doesn't know what Santa Claus rally means, since 1950, in years when the market's up 20% or more, the index was up 70% most of the time, and that means it's going to continue to run through Christmas. So now we have that mania jumping on top too. And the bottom line is, no matter if you call yourself a degenerate Dow person or you love the Santa Claus rally or you want a piece of Bitcoin, the bottom line is this, is when you get closer to retirement, you don't need those shiny objects. What you truly need is A, replacing your paycheck, because let's be honest, the fear of missing out is not your enemy. The administration, whether you like it or not, is not your enemy. China is not your enemy. Time is your enemy. And when you're young, you have the ability to take those long bets. And if it works, great, you make it through. And if not, then you still have time to make it back. But if you're getting closer to retirement, you don't need tons of money in these, one-armed bandits, if you will. You want to make sure that you replace your paycheck. You want to make sure that in that supplementing Social Security pensions, if you're blessed enough to have one, you got to recreate your lifestyle. And that is what beats the time component and the problem to this. Now, if you could take care of your monthly income and make sure that there's a savings portion on top of your monthly income so you can accrue for things like a cruise or, buying lots of presents or spoiling your grandchildren, that's the keys to the castle, because then whatever's left over, what you're not using to generate the income, then you can create a 60-40 portfolio. You can buy a little Bitcoin. You can buy a little marijuana stock if that's your thing. Not my thing, but it could be your thing. And then you can create whatever type of portfolio you want to afterwards and still grow it in retirement. I think people kind of fall into the get rich quick, and that's just something that human beings always want. They want to put $5 into something and come back out and have it being $50 million. But you want to use the law of large numbers to your advantage when you get closer to retirement. Why is that? Because in your 50s and your 60s, hopefully you're making the most money you've ever made. Hopefully you've accrued the most money you've ever had. And what you tend to realize is if you've got $1 million, $2 million, $3 million, you don't necessarily need a 50% gain every year. You need a solid 5. I mean, think about it. If you got $3 million and you get 5%, that's $150,000. You throw a couple Social Securities and a pension on top of that, night, you're done. Additionally, you don't want to lose that $3 million you've worked your tail off for 30 or 40 years. So I find it rather odd that you still have people in retirement talking about these get-rich-quick type of schemes when all you essentially need to do is have somebody put together a plan that can create a dividend or a yield that you can skim off the top, retain your principal, most importantly, and take care of the time risk that you're facing right now. And then whatever's left over to the side, you can do that. Right, Kyle?
And I like the way that Dave Ramsey says it. I don't agree with everything that Dave says, but he talks about the idea that your money should have a purpose.
Yes.
I always tell people one of the most unique things about my life is I became a financial advisor very young. I was in my mid-20s, and then I've done this for the past 15 years. And so I joke with my clients, I'm like, I know more about you than you do. I know more about 65 than I know about being in the middle of my life. I know about the end of the story. And so there's a lie that we're telling ourselves, which is that if we had more money, we would be happier. And that's not actually true, because what creates happiness is freedom.
That's true.
When you have to go out there on 400 or 285 and fight the traffic, and you have to go into a boss and say, yes, sir, and no, ma'am, when you have to deal with all these complex things like raising kids and paying mortgages, life gets harder and harder. And so there's this thought bubble of, well, if I could just make enough money, I could find freedom, I could find happiness, and I could get out of here. And one of the most amazing things that I get to do for people is look them dead in the eyeballs and say, hey, you're already here.
Yes.
That next 2 million, that next million, that next 300 grand will not make a difference. You today can retire and live the rest of your life in freedom, happiness, and you do not even have to look at Wall Street.
Or 400.
Or 400. Like,
I would love to never see 400 again, but how do you do that for people, Kyle? Like, how do you go ahead and give them that type of confidence?
Well, the first thing we've got to do is we've got to understand the person. So a couple years ago, a gentleman asked me, he said, Kyle, you have a lot of confidence. What's a bad day for you? I said, well, as a fiduciary, I have the right to offend. Mm-hmm. And I'm essentially putting myself in your shoes and acting on your interest. So if I don't know you, how in the world could I do that? So step one is to just have a cup of coffee. I want to know about your grandkids. I want to know about your lake home at Lake Burton. I want to know about the cars you like to drive. I want to know how much money you like to spend. Now, I can give you some context, like we talk about on the show sometimes. We know the averages here in Atlanta. 60,000 gets it done on the bills. Well, are you above or below those averages? But we want to get to know you And then we want to build you a plan. So then to build into that plan, we're going to talk about taxes, we're going to talk about Social Security, we're going to talk about market risk, and we're going to talk about market performance. And then that's going to allow you to get a tangible physical document to say, in 1,000 hypothetical scenarios, here are the odds at which you will succeed. And that gives people the clarity, the freedom, and the understanding to move forward with a team and with the ideas that they can execute retirement successfully.
I love that because we do make full financial plans for people. So I want to do something today for the listeners, because if you don't have a full financial plan, please give us a call. At Hoffman Financial Group, we design these specifically for you at no cost and no obligation. And it does include that tax plan. It does include estate planning and market risk and where to take the chances and where to get protected. Guys, we do this at no cost for you. For the first 10 callers today, we will create this full financial plan for you. Give us a call, 404-341-6767. That's 404-341-6767. Or you can do the same thing online at unleashyourmoney.com. Now, I want to talk about a rule that we teased a little bit earlier, right? It's the $1,000 rule. $1,000 a month rule, forgive me. What is this?
Yeah, so the $1,000 a month rule is a retirement rule. And the idea is that there's a guideline to estimate retirement savings based on your desired monthly income. For every $240,000 you set aside, you receive $1,000 a month. So essentially we're just saying, hey, 5%. We've all talked about the 3% rule, the 4% rule. I would argue with the cost of things these days, it's more like a 5% rule. So if you have $1 million, I can send you $50,000 a year. So think through, okay, how much do I have? And then that would provide me at least one of the building blocks. The other building blocks, of course, would be your pension, your real estate, your Social Security. But as you stack those together, you start to understand how you replace your paycheck when the W-2 stops.
Yikes. I mean, I didn't become a millionaire to spend $40,000 a year. I became a millionaire to become a millionaire. That's an interesting rule. And, for those of you out there that don't know that, there's a lot of really robust ways that you can create the income that you need in order to replace your paycheck in retirement. If you're using the typical Wall Street model of stocks, bonds, and mutual funds, and you know this, Kyle, it seems virtually impossible. Like, if you have a good dividend portfolio, you might get 3 to 4% in this dividend portfolio, and you're assuming all the risk, right?
I literally just had this discussion yesterday. A lady walked in and she said, my advisor told me I can't retire, I don't have enough. And I was bewildered. I was like, I don't understand. What am I missing? It's so obvious that you can retire. But to your point, she was using the stocks, bonds, and mutual funds.
Well, she wasn't with a retirement planner. And so here's why it's important. Most people who come into our office and they're looking for a retirement plan, they're just organically outgrowing their broker. Because if you've got stocks, bonds, and mutual funds and that's it, it's going to seem impossible. When you sit down with a fiduciary investment advisor, we're going to have different tools at our disposal to help you have a successful retirement. And it's not the typical stocks, bonds, mutual funds that you think it's going to be. Because most people come in here like, I thought this is all this was. It's not. There's so much more. So if this sounds like you, give us a call. We're happy to help you retire properly. If you haven't had your 401k looked at, give us a call. We can do this analysis for you at no cost. 404-341-6767. That's 404-341-6767. Or you can hop online and check us out on unleashyourmoney.com.
Eric Johnson and Kyle Allyn are investment advisor representatives of Brookstone Wealth Advisors, LLC, a registered investment advisor and affiliate of Brookstone Capital Management, LLC. BWA and Hoffman Financial Group are affiliated under common ownership. Registered investment advisors and investment advisor representatives act as fiduciaries for all of our investment management clients. We have an obligation to act in the best interest of our clients and to make full disclosures of any conflicts of interest. Please refer to our firm brochure, the ADV2A, page 4, for additional information. The Hoffman Financial Group and WSB are not affiliated. Exposure to ideas and financial vehicles discussed should not be considered investment advice or recommendation to buy or sell any financial vehicle. This information should not be considered tax or legal advice. Individuals should consult with a professional specializing in the field of tax, legal, accounting, or investments regarding the applicability of this information for their situation. Any client experiences discussed during the show are unique to that client. They are not meant to imply or suggest you will experience the same results. Past performance is not a guarantee of future results. Investments will fluctuate and when redeemed may be worth more or less than when originally invested. Any comments regarding safe and secure products and guaranteed income streams refer only to fixed insurance products. They do not refer in any way to securities or investment advisory products. Fixed insurance and annuity product guarantees are subject to the claims paying ability of the issuing company and are not offered by Brookstone. Index or fixed annuities are not designed for short-term investments and may be subject to caps, restrictions, fees, and surrender charges as described in the annuity contract. Please refer to our firm brochure, the ADV2A Item 4, for additional information. Hoffman Financial Group is not affiliated with or endorsed by the Social Security Administration or any other government agency. Insurance licensed in Georgia, number 163546.